Good morning, ladies and gentlemen. It's good to see many old friends here. The big question is gold in a new bull market? Is a new bull market ahead? And the answer is yes. And that's my kind of audience. Thank you very much. In the next 3 to 4 hours, I will explain my case for gold. I will basically do a short preview of the next gold report. By the way, 28th of May is the big day when we're going to publish the next In Gold We Trust report. We're handing out some printed copies of the report. If you're interested, that's a 2018 report, but I think there's still lots of valuable and also timely information in. Just a few words about our company and what we're doing. Incrementum is based in Liechtenstein. We're in 3 different areas. We're doing fund management, managing 5 funds at the moment, mostly in the commodities and precious metal space. Then we're doing wealth management for high net worth individuals and research, mainly the In Gold We Trust report, but we also got the sister report called the Crypto Research Report that we're publishing now on a quarterly basis. Just a few words about the gold report. 28th of May is the next big date. It is a very, very big project nowadays. I started writing this piece 13 years ago, and now it's, I think, one of the most widely followed publications on gold. We've got 15 people involved writing the report, researching, crunching the numbers, editing, layouting, etc. And it wouldn't be possible to do that without our fantastic partners from the industry. We are publishing the report for free in German, in English, and the big news is that we're going to publish the report from now on in China, so there will be a Mandarin version of the report as well. So 28th of May is the big date. Until then, there's basically for me 24/7 working on the report, and I think the next 20 minutes will be mainly about, the key takeaways that we will present in this report. But let's start with trust. We've heard before that trust is very important, and actually our assumption, and you probably feel the same, is that trust in many areas is crumbling. Before I start talking about something, I always enjoy to do some sort of a research and about the definition and the meaning of a word. So what's the definition of trust? It's the firm belief in the reliability, truth, or ability of someone or something. Trust comes from the old Norwegian word trauster. Trauster means strong. And as you know, ladies and gentlemen, trust is the foundation in everything we do. It's important in families, of course. It's important in society, in business, in politics. And from my point of view, we're seeing many, many areas at the moment where trust is crumbling. And unfortunately, that's really a secular trend. Now, first of all, I want to ask you a question. What is the most dangerous place on a road? It's not on highways. It's at traffic lights. More than 50% of all accidents occur at traffic lights. Why? Because the pedestrian trusts that the driver respects the traffic light, doesn't drive drunk, doesn't text when he's driving, and that he's taking care of everything. While the driver trusts that the pedestrian doesn't cross the street at a red light. So trust is important in traffic, but it's also crucial in many, many other areas. Like media, for example. Who really trusts Facebook anymore? The young people don't really trust Facebook anymore. The number of accounts for the millennials was dropping significantly. Do we really trust giving Facebook our most valuable, most private data? All the information we have from families, friends, our pictures, We've had the Cambridge Analytica scandal last year, where basically they paid a fine of 500,000 US dollars, not too much for Facebook. Then 80 million accounts were hacked. So I think that trust in social media is crumbling, but it's also crumbling in traditional media. Spiegel scandal, for example. Spiegel used to be one of the most renowned magazines in Germany. We've heard that Klaas Relotius, who was a very, very famous journalist at the Spiegel, he basically made up all his stories. And we're seeing it not only for magazines, but also for many newspapers, that people do not trust traditional media anymore. We're seeing it when it comes to trust in systems and things that we have learned at school or university. Chemtrails, for example, big thing for the conspiracy camp. But even better, the Flat Earth Society. You wouldn't believe how many people nowadays really believe in the Flat Earth theory. People say that they've got members all around the globe, but it's staggering. The numbers of people is exploding researching Flat Earth theory. There's even a brilliant documentary on Netflix. But that shows us that people are losing trust in the systems and the things that they basically learned at school, that they were taught at. We're seeing it also in sports, cycling, swimming, cross-country skiing. The pity is that nowadays everybody believes that the winners, they are using doping as well. So nobody trusts in the winners anymore. The winner of the Tour de France, for example, everybody says, okay, he's just doping a bit smarter than the rest of the gang. And of course, we're seeing it with big corporations. Volkswagen, by far the largest car producer. We had the Dieselgate scandal. We've had many other car manufacturers basically faking their emission data. We're seeing it in politics. Politicians on the very right and on the very left side of the spectrum winning elections all over the globe. You probably feel the same way, but it's very hard nowadays to have a sober and really good discussion with somebody about politics. It's extremely emotional nowadays. A study coming out of Harvard, very, very frightening, I would say, that the millennials do not trust in democracy anymore. Actually, for them, some sort of a very left-wing socialist leader that takes control of everything would be the most favorable option. And we're seeing, of course, that trust is important when it comes to the financial markets. Lehman Brothers didn't have any single quarter making a loss in 158 years of existence. No single quarter. And then within 1 week, the market lost trust in the balance sheet and the liquidity of Lehman Brothers. And it was game over. So trust is important in financial markets, of course. And from my point of view, ladies and gentlemen, trust is something that can be fostered, that can be rebuilt only very slowly. When trust is gone, it takes very, very long to re-establish trust. And from my point of view, we're in a time where trust in all those areas and many other areas is crumbling. And this will affect us not only in investing, it will affect us in doing business, but also when it comes to social things. And it's also, when we're talking, of course, talking about the trust in central banking. Janet Yellen, she said, I don't see a financial crisis occurring in our lifetimes. It was roughly 1 year ago. Then in December last year, she said, well, I didn't say it that way. It was taken out of context. But it seems that this monetary U-turn that we've been seeing the last year, that this is happening now. What you can see on this chart is basically the big, the actions by the most important central banks. In 10 years, they created 18 trillion US dollars out of nothing. And then, 2018, they tried to become a bit more hawkish. And third and fourth quarter 2018 were the quarters that for the very first time in 10 years, they said they're going to remove the safety net. They're going to remove the punch bowl from markets. And everybody said, okay, while the US, the Federal Reserve is doing quantitative tightening, the ECB is getting much tighter now. We're seeing even the Bank of Japan doing some sort of tapering, and perhaps they even increase interest rates at some point. Now, what happened in fourth quarter? Central banks removed the safety net, and we have seen the worst December in equity markets since the Great Depression. We have seen that in the fourth quarter, every asset class was down. Every asset class but gold. So from my point of view, it is very obvious that now, after being for 10 years very, very expensive, very, very dovish, then 2 or 3 quarters trying to reappear, trying to gain some trust in markets, sounding a bit more hawkish, and then the market showed central bankers, okay, it doesn't work. So the next couple of years will probably be extremely dovish again when it comes to central bank action. And we're seeing it, of course, when it comes to trust with the Federal Reserve. The markets kind of thought that Jay Powell is different, that he's a bit like a new Paul Volcker. But then, of course, he backed down, because the market expected a couple of months ago that there will be 3 to 4 rate hikes in the US. And now the market expects lower rates, and the market expects more quantitative easing. Actually, they will do some sort of a backdoor quantitative easing starting in fall, where they will buy 25% of the net issuance of all US treasuries. And of course, Signore Draghi, sitting in Frankfurt, he will go down in history books probably as the only central banker that never ever raised interest rates. Normally, on average, in the course of a recession, interest rates are lowered by 500 basis points. Well, have fun, Mr. Draghi. We're still at 0, so I'm not sure how it's going to turn out. But it seems that we're a bit going the Japanese way. What you can see on this chart is the balance sheet of the Bank of Japan, leading by 10 years. And also the central bank balance sheet of the Federal Reserve and the ECB. So, from my point of view, compared to the Bank of Japan, where the central bank balance sheet is already more than 100% of the GDP, there's quite a lot of leeway, and they're going to use this leeway probably. And there are many signs recently that the Fed and other central banks will become much more aggressive in the next downturn. So the Fed was talking about the return to 0 rates at the last meeting. Yellen, who actually looks a bit like Harry Potter on this picture. I'm sorry, I hope she doesn't watch it, but Yellen says the Fed might turn to QE in another downturn. Feds Williams, very, very important gentleman at the FOMC board, he says, we may consider negative rates and QE in a downturn. Then, of course, the San Francisco Federal Reserve just came out with a brilliant paper saying 0.25% negative rates would be the optimal setting for financial markets. So, ladies and gentlemen, this is the new Fed appointee by Donald Trump, and he's saying right away, Stephen Moore, he said, well, actually the Fed should lower rates by 50 basis points. So, ladies and gentlemen, expect more QE, expect lower rates, perhaps negative rates, expect MMT, that's a new buzzword. It's modern monetary theory, or as Dave Rosenberg says, it's magical money tree. Well, they tried some sort of the same politics in Weimar Republic. It didn't turn out so well. But MMT, of course, nobody knows what that's gonna be about. It sounds very sophisticated. And from my point of view, we will see very, very aggressive measures like this going forward in the next downturn. And it seems that we're already clearly in a downturn. In 95% of all countries, economic numbers are coming in weaker than 1 year ago. We're seeing that the yield curve is inverting. Of course, now everybody says, nah, yield curve isn't doing a good job this time. But from my point of view, we might already be in some sort of a pre-recession phase in the United States. And obviously, Germany, France, Italy are in or very close to a recession already. Now, when it comes to trust, it is very important to talk to people. And my colleagues and I, we travel quite a lot. We're meeting institutional clients, we're meeting pension funds, we're talking to retail investors, to barkeepers, to taxi drivers, whatever. And we found out when it comes to the system, there are basically 3 different camps. The first camp, that's the believers. That's, I would say, the economic mainstream. For them, zero interest rate policies and QE have positive effects. It just takes a bit longer this time. And for them, there's absolutely no need to hold gold. They actually hate gold. Then there's the second camp, the skeptics. They've got some serious doubts about the sustainability of monetary policy. And from my point of view, this is the biggest camp within the financial sector. Those skeptics, they are very, very pragmatic gold holders. And they're marginal buyers. They like to buy ETFs, for example. And then there's the third camp, the critics. It's a very small camp still. They've got the conviction that the monetary system is flawed, that the current economic recovery is artificial and not sustainable. And for them, gold is a systemic hedge and also an inflation hedge. They buy physical gold with very little counterparty risk and mining stocks for some leverage. And the beauty of it is, this is a one-way street. So it's only going that direction. When you're in the critics camp, you will probably never go back and say, well, I think what the Federal Reserve is doing now, that's brilliant. That's going to really, really solve our crisis. We need more QE, we need lower rates, and that's going to change something. So it is a one-way street, so the critics camp will get bigger in the course of the next crisis. And as you can see here, the second camp, they are marginal buyers. They are buying ETFs, for example. Every time the prices rise, they buy. Every time the prices fall, they sell. And it seems that many institutional players are on the sideline at the moment. Gold reappeared on their radar screens in the 4th quarter. And now they're really thinking about getting into gold again. It looks a bit like people in a disco or a club when nobody's on the dance floor, only a few people, and everybody kind of wants to dance, but perhaps needs another glass of wine or beer or better music, but everybody kind of wants to enter the dance floor and really get started. It is a bit of a similar feeling that we're having at the moment. And when it comes to gold, people say gold is kind of dead, but have a look at this chart. Well, actually, in euro terms, gold is up 4.2% since the beginning of the year. In Swiss franc terms, it's up 3.8% since the beginning of the year. In dollar terms, it's up 1.2%. It's not that bad. Actually, in many currencies like the Australian dollar and the Canadian dollar, gold is actually trading at or very close to new all-time highs. But everybody is just staring at the dollar price of gold. And this is when people lose trust in money. When you devalue money, you devalue trust. That's the price of one chicken in Venezuela, 15 billion bolivares. And gold worked pretty well in Turkey and also in Venezuela. It did a brilliant job. It did exactly what it's supposed to do. It protected your purchasing power. That's what it's all about. Now, the third topic that I want to talk about is de-dollarization. We're writing about the de-dollarization in our In Gold We Trust reports for 4 years now, and now it's going mainstream. I had an interview with Bloomberg 2 weeks ago when they asked me about de-dollarization. So it really shows me that this is a topic that people care about. And one of the most renowned gold analysts out there, he said, "I believe in the golden rule, the man with the gold rules." That's Mr. T. And you can see China and Russia, they're constantly buying gold. It's an open secret that China has got much more gold than they officially publish. And they're also not really reinvesting in US treasuries. And even more extreme, Russia. They're buying gold on a monthly basis, and they just dumped all the US treasuries. We can see that compared to 2008, emerging markets raised their gold holdings by 90%. It's not only Russia and China, it is also, for example, Poland, Romania, Hungary buying gold for the very first time. It is the repatriation trend, so people getting their gold back into their own countries that we're seeing. It was Germany, it was the Netherlands and Austria repatriating their gold. This is also a sign of a loss of trust in counterparties. And this is probably one of the biggest secrets, I would say, in the market at the moment. The Shanghai Oil Exchange started only 1 year ago. And at the moment, they've got a market share of 13%. So within 1 year, they achieved to get a market share of 13% in by far the largest commodity that is trading. So where are we going to get from here? Jim Grant, he said, "The only permanent truth in finance is that people will get bullish at the top and bearish at the bottom." He couldn't be more right, I think. From my point of view, that's the Dow theory. Of course, that's very much simplified. But in every trend, Charles Dow, the godfather of technical analysis, said there are basically 3 phases. And of course, it's not easy to know in which phase we currently are and when we're going to change from one to another stage. But I think that we have seen in the last 3 to 4 years the accumulation phase, where only people, contrarian investors with a very long time horizon, with the guts to go against the market, where they started buying into gold and the mining sector again. Now the second part of the trend is the accumulation phase, where the media picks up again, where analysts raise their price targets. Just to give you one number, in 2011, when gold was trading at 1920, at this new all-time high, price forecasts by JP Morgan was, I think, $2,400 US. Citigroup was even higher with $3,000 US. At the moment, their price forecasted are, I would say, at current prices or slightly below. So we don't see any bullishness coming out of Wall Street. We're going to see that in the course of the new uptrend. And at the moment, it seems, as I've said before, that many institutional players, they got a warning shot in the fourth quarter and that they want to get into gold again. But there is this massive resistance at 1360, 1380. We tried to go above that already 4 or 5 times, but from my point of view, the next attempt will be successful because opportunity costs are better now. I think that the technical picture looks much stronger than at the last couple of times. And from my point of view, once we go above this massive resistance that everybody is talking about, we can go to 1450, 1500 within only a couple of weeks. There will be no major resistance afterwards. So I'm already coming to my conclusion, and as I've said, this is kind of a preview to our upcoming gold report. The main theses are we're seeing a loss of trust in many areas of life, and that's a secular trend. That's going to affect us. It might sound a bit philosophical, but it's going to affect us in many different areas of our lives. The monetary U-turn is on its way. We are in a recession or in a pre-recession phase in many countries, so expect more quantitative easing, negative rates, MMT, GDP targeting, helicopter money. From my point of view, we'll see much more direct measures because the whole inequality topic is becoming more important. So therefore we see less stimulus in financial markets, but more direct measures like MMT and helicopter money. The de-dollarization trend is continuing. Last year we have seen a 50-year high in central bank buying, and gold is in the early stages of a new bull market. So ladies and gentlemen, I hope that I could strengthen your trust in gold. I'm pretty sure that in the next couple of months, the market will find trust in gold again and will realize that it's prudent to hold at least some gold. But whatever you do, you should really have trustworthy partners, be it in business and families, but also when you get a tattoo. So, ladies and gentlemen, I hope you enjoyed it. Thank you very much for your attention. Thank you.